So, Sohail, talk to us. What is self-managed super fund?
Okay, yeah. So it's a good thing to about the disclaimer that it's definitely not a financial planning advice. Everyone should go back to the respective professionals for their personal advice. Okay. Self-managed super fund. As you know, superannuation it's a retirement saving scheme in Australia, which is compulsory. It was introduced in 1985, I think. Okay. Since then, it was compulsory for all the employers to put some money aside for retirements for their employees, and after they retire, they can access that money. It is a self-managed super fund is the same thing. You are saving for your retirement, and employers are required to contribute some money, compulsory mandated percentage, into superannuation scheme for your retirement. Self-managed means that now you have the flexibility to manage that money yourself instead of giving it to your financial advisor or managed investment scheme or managed funds. You manage your funds yourself. So it gives you more, it is more flexible vehicle for your retirement savings. How you invest, where you invest, you get some more options there. So that's what self-managed super fund.
And what's the process of setting this up? So, if someone wants to set up a self-managed super fund, we'll use SMSF because it's just easier and quicker to say it. What's the process of setting this up when we are setting up SMSF, and what fees is associated with setups and ongoing management? Because that's a big question that everyone asks.
Yeah, that's true because lots of people think that it is an expensive exercise to set up a self-managed super fund and to manage it. The short answer is it is subjective. If you ask ASIC, they will say you don't start your SMSF until you have 500,000 in your retirement savings. If you have a decent amount in your super, you can start your self-managed super fund. Even you can start with $1, doesn't really matter. But you should be getting that financial advice whether it is suitable for you or not. That's a different thing. If you decide and you got an answer from your financial advisor that yeah, you should explore the SMSF or self-managed super fund, the cost of establishing super funds it sits around $1,500 to $2,000. Okay, that's the initial cost, and that cost to be reimbursed by a self-managed super fund once the money is available in the super fund. Once the super fund is established, it's like a business structure, like you have family trust, but different kind of very regulated family trust or trust. You established, there's some documentation to be done. Once your documentation's prepared, signed, executed, get an ABN for your super fund, open a bank account, and roll over from your retail super into your self-managed super fund. Every year, you need to get your financial statements and audit done for your super fund. Okay. So that's an ongoing cost every year. Usually it depends on the complexity. If it is an accumulation mode with a simple investment, couple of bank accounts, then would cost you around $1,200 to $1,500 a year, including audits. If you have different diversified investment in there with shareholdings and investment properties, then could go a little bit more than that. But usually it is not that. Maximum I have seen around $5,000 a year for a super fund, which more than $2 million in the balance in there. So yeah, the balance grow, but the cost does not go up with the balance.
Yes.
In contrast, you can see that in the retail super fund, the balance go up because it is tied up with the percentage of management fee and advisor fee. It goes up with the balance when the balance go up in the retail
Yes.
super fund. Yeah.
And so a lot of people, when you talk to them, of course, it's the entry fees that people care
True.
about a lot more. And that's what painful, cost that comes in at the very start. But what a lot of people don't realize that fees can be covered by their superannuation itself. It's not an out-of-pocket expense or a cash flow expense to a lot of people. Is that right?
That's right. Yeah, they can get that money because that's the cost of the super fund anyway. So, which is, yeah, you can get it reimbursed from your self-managed super fund. Yes.
Perfect.